I'm going to give you 5 warning signs that your accounting might actually be holding you back. The first sign is that your bank and credit card accounts are not being reconciled in a timely way. Ideally, your bank or credit card accounts should be reconciled within a few days or a couple of weeks after the end of your accounting period, the end of the month, or the end of the billing cycle for credit cards. Sometimes we see companies whose accounts are being reconciled sporadically. Maybe every 2 or 3 months, someone is reconciling the accounts. Maybe they've never been reconciled. The process of reconciling bank and credit card accounts helps to ensure that all of the transactions that are flowing through those accounts are properly recorded and captured, that we're not missing transactions or counting transactions twice. And so that's an important step to ensure that your financial statements are accurate. The second warning sign is that you may have old uncleared transactions that are still sitting on your bank reconciliation. Sometimes what we see is a transaction gets recorded, but it never clears the bank. And so that means you've got a transaction recorded in your books that may not have actually happened. And if you look at your bank reconciliation report and you see uncleared transactions going back months or years, that's an indication that you might have a problem. The third warning sign that your accounting might be holding you back is when you look at your income statement or your balance sheet, if you see account descriptions that say uncategorized or ask my accountant, those are transactions that haven't been properly categorized. They could be revenue transactions, they could be expense transactions, they could be transactions that should be recorded on the balance sheet that have nothing to do with your income. But you don't know because they're put into a generic category, a holding account, because somebody doesn't know how to record them properly or what to do with them. The fourth warning sign is when you look at your balance sheet, do you see negative account balances? Typically, your asset and liability accounts should have positive balances. If you see a negative loan balance on your balance sheet, that's an indication that transactions are not being recorded properly. Loan payments may not be amortized correctly. And so that's your fourth warning sign, negative balances on your balance sheet. The fifth warning sign is that your account descriptions on your balance sheet or your income statement are just confusing, or there's no flow to the way that they're organized. If you look at your income statement and related accounts are spread out all over the place and there's no consistent flow to it, or you have descriptions that are confusing, that's an indication that your financials are not giving you the information you need. As an example, when you look at your income statement, are all of your personnel expenses grouped together where it's easy to see how much you're spending on personnel? Are your wages and salaries, are your commissions and bonuses, your payroll taxes, your benefits expenses all grouped together where it's easy to see? If you're having to look on in different sections or on different pages of your income statement to try to see those pieces of information, that's an indication that your financials are not telling you a neat and consistent story that's easy to follow. And when your financials are confusing and your numbers are not accurate, it's hard to have confidence in those financials and it's hard to make good decisions to help steer your organization in the right direction. So I hope that's helpful. But those are 5 warning signs that your accounting might actually be holding you back.